Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Thursday, February 7th. S&P futures pointed to a lower open. That was due in part to the poor January same-store sales that we warned of Wednesday. Part of it, though, was due to additional bearish news. Cisco reported earnings in line with expectations. However, Cisco gave a very cautious outlook. It's hard to imagine how any company would provide anything other than a cautious outlook at this time, but this nonetheless slammed the stock in after-hours trading on Wednesday. The January same-store sales data are soft. Walmart reported a 0.5% same-store sales gain over last year. Target was down 1.1% compared to an expected decline of 0.7%. Costco had a gain of 7%, but a variety of specialty stores had lackluster results. As we noted yesterday, weather played a factor. As readers in the Northeast and Midwest know, the weather in January and February has been brutal. This can affect sales as much as an extra selling day does in the monthly auto sales report. The stock market, though, is in no mood for excuses, and the first reaction is to sell anything that even remotely approximates bad news. That was the case Wednesday when the stock market sold off sharply after Philadelphia Fed President Plosser gave a speech in which he noted the Fed's commitment to fighting inflation. That is standard fare for Fed officials. Yet, the stock market somehow came to the conclusion that perhaps the same committee which voted to lower the Fed funds rate 125 basis points in 8 days is suddenly not going to keep cutting rates amid weak economic data because core inflation didn't come down last month. The interpretation was a real stretch, but again, it doesn't take much to get a market sell-off these days. New claims for unemployment for the weekend of February 2nd dropped to 356,000 from 378,000 the prior week. The trend in claims has been very choppy. Claims hit the 350,000 level in mid-December, then dropped sharply in early January before surging last week. Now there is this drop. In itself, this level is not particularly weak, but the trend and implications for payrolls are unclear. This 1 week of data is ambiguous. The market tone remains very fragile. There are good values in many sectors, but as we have said before, it will take time for the market to overcome the worst fears, and even after that, the earnings outlook for 2008 is mediocre. I'm Pat O'Hare for Briefing.com. Thanks for listening.